Deborah, thank you very much. Now, the Irish packaging giant Smurfit Kappa has reported full-year revenue below analyst estimates, but EBITDA just above the forecasts. Let's make sense of the numbers. The man who runs them, Ken Bowles, CFO at Smurfit Kappa, joins Nera and I this morning. Ken, good to see you this morning. Look, what I want to get a sense of is every CEO that we're speaking to in the real economy side, was there a slowdown in the fourth quarter? What happened in the back end of your business in 2018?
Morning, Manus, and thanks for having me. I think it's clear that some of the bigger economies in Europe did suffer some level of slowdown in the second half. We saw a very good first half, and that really continued well into October. I think November was in line with expectations. I think December is slightly below. I think what's pleasing for us, though, is as we've come back in January and into 2019, certainly in the context of Europe, we're ahead of expectations, and indeed in our Americas business, which had a very good 18 and actually ended quite strongly in terms of demand, 19 has started really well too. So yes, while there was a bit of softness coming into December, I think more pleasing is the fact that on tough comparisons to 2018, 19 has started quite well.
It started well. We're heading into the uncertainty of Brexit now, though, Ken. Are you taking steps to contingency plan for no deal?
I think when we look at our business in the context of the UK specifically, it's quite an island economy. So broadly, everything we make in the UK, we sell in the UK. So, you know, we do take some paper from our UK plants or Irish plants, but that's not necessarily a logistical problem. I think our bigger plans are probably linked to our customers' plans around their plans for no-deal Brexit, in the sense that what supplies they might need to hold, but we're not seeing any of that just yet. I think, you know, while no deal every day that passes, no deal becomes maybe slightly higher risk. I think ultimately you have to believe that two parties are willing to come to some level of arrangement here to avoid the level of instability that could result from no deal. So I think we're relatively optimistic at this point, but you know, given that our role really as a packaging supplier is also as a supply chain partner, I think we react to some of our customers' needs in that kind of event also. Yeah,
makes sense. I mean, Tony Smurfit did say back in August that Smurfit Kappa's, you know, freezing UK investment, though, amid the Brexit uncertainty. Can you give us an update on that? Are you still freezing that investment in the UK?
We're certainly freezing any large-scale investments. I think we continue to invest in our plants in the UK because you know, they're also market-facing and need to serve the customers within the UK. I think we're not any different than any major investor coming into the UK, in the sense that they've shelved or slightly delayed plans until we have some level of certainty on what's happening, because the impact on whether it's tariffs or imports or something else might require a rethink on investment. But so normal level of investment continuing, but larger scale investments we continue to look at.
OK, so that's that part of the conversation. There's no doubt about it. You rejected a bid last year. Yourself and Tony fought very aggressively. Your stock is down 25% since you rejected that bid. What do you want to say to the shareholders? Because there might be some people feel perhaps you could do better at school now.
I think it's fair to say that whether through the process or after the process, we engage very actively with our shareholder base. I think we've seen a low level of turnover in that shareholder base, so we suggest they're relatively happy with Smurfit Kappa. I think what's clear is, though, you know, the rejection of the bid or the bid process itself really wasn't at the expense of performance. If we go back to May last year, we said that we would be materially better than 2017. I think that's what's panned out. You look at where we've ended up in terms of return on capital employed of 19.3%. And if we think about this business as a long-term business, which it is, I think you've got to look at the bid in the context of how that valued Smurfit Kappa over the longer term. And in reality, the bid that was placed in front of us, you know, and along with our advisors and the board in general, didn't place a fair evaluation on Smurfit Kappa at that time. And I think, you know, that played out, you know, if you look through our share price through Q2 and into the third quarter, it held up at those kind of bid levels until general equities came down across the world. So, you know, I think we have to see it in the context of that also.
OK, and the institutional investors, we'll come back to that in just a second. What I do want to know, you talked about your return on equity there being like 19%, really quite strong. But you also would maintain that the Smurfit Kappa story is a leverage, one of deleveraging. Now, what exactly are the numbers?
If you think about if we go back to IPO, which is our last public place, we have 5.5 times leverage. You know, we saw ourselves through the financial crisis and the effect that had on where we were. But our focus really from 2013 onwards has been one of continued growth and acquisitions, and we've done well over $1 billion of those. You know, continuing to focus on internal investment to grow that return on capital employed from 11% through 13, 15, 17, and ending up at 19. But also attacking, if you like, the leverage problem or bubble we had. And at 2 times ending 2018, you know, sub 2 times if you pro forma for the acquisitions, and with maturity profile of almost 5 years on our debt and significant liquidity, really I think we're dealt with Smurfit Kappa as a leverage vehicle. We see ourselves in a very different place.
Speaking of a different place as well, just to go back to International Paper, if they were to come back and return with an offer, would your response be any different today?
I really can't speculate, Neera. I mean, it's not my job to focus on IP. It's my job to focus on our customers and what they need. So I can't speculate on what IP might or might not do. I think it.
Okay, that's well deflected on that. Can I ask you what the one thing that came up? You said you didn't have a high turnover in the institutional investors, but what did they ask you and Tony to do? What's the most important thing for them?
I think the most important thing for them, and it really came out of what we did this time last year, which was the delivery of our medium-term plan, was to deliver on that plan. And that plan is designed, you know, to take Smurfit Kappa in terms of investment profile through 2021. You know, it's 1.6 billion of internal investment spread across our paper, our corrugated, and indeed some level of cost takeout. And it's designed to trap and attract growth where we see it. It's designed to make sure that the paper we supply to our box operations stays best in class. And that's really why you're seeing the level of returns we've generated through 18 begin to come through. It's the existing asset base that we have in Smurfit Kappa, plus the opportunities we have ahead of us. And if you think about some of those expanded opportunities beyond our normal FMCG base of 60%, it's the continued rise of e-commerce as an offering. It's the beginning of the war on plastic substitution. It's all those things are beginning to feed into bigger drivers of secular growth alongside the normal drivers of growth.
This has been a wide-ranging conversation, Ken. I'm loving it. So let me just finish with a broad-based question on the moves towards protectionism. Of course, we're looking ahead to these US-China trade talks. How worried are you about the impact of trade talks, not even just on your business, but on the industry globally?
I think trade is a two-way street. I think ultimately the US and China will have to come to some compromise. Otherwise, it does, as we've seen in the last number of months, Neera, an effect on global trade and sentiment more so than that. I think we have to be worried as a global player that if it continues, you end up with a level of a lack of stability that you'd like. But fundamentally, I think trade is a two-way street, and I think they'll get it together.
Ken, thank you very much for being our guest this morning. Ken Bowles, CFO at Smurfit Kappa.